So good morning, everyone. It's already 5 minutes past 11. May we ask you to take your respective seats? Okay, so again, good morning. My name is Clarissa Cabalda from Investor Relations, and welcome to our hybrid briefing on Sibulan Masters financial and operating performance for the year 2022. So joining us this morning is our Chief Operating Officer, Mr. Jose Franco Soberano, and our Chief Finance Officer, Mr. Gran Cheng. I would like to acknowledge as well the presence of our SVP for Marketing, Ms. Joey Bergenthal, and our external auditor, PNA Punong Bayan and Araulio, headed by the audit partner, Ms. Mai Bisnar. Thank you for joining us, Ms. And dialed in through Zoom are members of the CLI management team, heads from strategic business units and the finance group. We have in the call a total of close to 50 participants. Available in the PSE Edge and in our website at ir.sibulanmasters.com. And then other reminders, participants are kept on mute during the webinar session. So for any questions, those in Zoom, you may use the Q&A chat box provided and indicate your name and organization so that we can address you accordingly. And for those here with us face-to-face in Ascot BGC, on our company's website right after the briefing. So for the flow this morning, our CFO will present the financial results, followed by our COO, who will present the business updates and the outlook for 2023, and after which the Q&A session will follow. So without any further ado, to start the meeting, let me turn you over to our COO, Sir Franco.
Hello, good morning, everyone. Hope you had your nice cup of coffee. It's a very special day for us. Our last face-to-face briefing with you here in Manila was probably last 2018 or 19. So we always believe in a very hands-on approach at Sibulan Masters, and we're really glad to be here with you to have our briefing face-to-face. Also because we have very good news to share. And we hope to do this more regularly. We are even opening an investor relations office finally along our Nais Avenue towards the end of the year. So in 2022, it was really a year of outstanding results. We don't mean to sound like broken records reporting outstanding results yearly, but it is our happy reality at Sibulan Masters. Normalized net income to parent increased to 3.2 billion from the 2.6 billion in 2021, higher than the 20% guidance we provided earlier last year. We're one of the few companies that still provide income guidance, and we're just very happy to keep on hitting the guidance. So this is normalized given the great effect in 2021. Another strong figure to report is our 40% growth in consolidated revenues from 11.2 billion in 2021 to 15.7 billion in 2022. And there's a continuous build-up of unrealized revenue of 29 billion. That will be recognized as accomplishment and percent of accomplishment increases for the projects. Another very significant figure to report is our very strong and healthy balance sheet. We now have over 85 billion in assets. I like to keep pointing out that during our IPO, we were at 7 billion. So that's more than 10 times in asset growth. Yes, we've been very busy. We launched 16 residential projects worth 19.4 billion in sales value. And this was 7.5% higher versus our 2021 launches. And I'll report later how well we did with our sales take up of that 19.4 billion. And of course, staying consistent with our CLI commitment in creating shareholder value, we declared a regular dividend of 15 centavos per share and a special dividend of 0.3 cents, 3 cents per share, with record dates of April 18 and a payment date of April 28. Wow, that's 2 weeks from now. So hopefully I have my fellow shareholders here in the room who will help me pay for our lunch this afternoon. So to summarize this, and CLI really continues to understand our market in Visayas, Mindanao. As you all know, our new housing secretary is targeting 1 million new houses to be launched or built yearly for the next 6 years, whereas we've only been doing 200,000 as a country prior to that. There is a significant need, and it needs very responsive, customer-oriented, organizationally, I would say, synchronized real estate developers to realize that and realize that with outstanding financial results as well. So we feel at this point that we've really mastered our market, and we also reported in our press release that we're really eyeing Luzon in the next 2 years. So I'll be here more often. Grant has to be here more often. And we're excited about the opportunity of doing our brand of development, our homegrown brand of development in key areas in Luzon. So I'll now turn it over to Grant to talk about our financial performance.
Thanks, Franco, and good morning, everyone. So just to set the stage and provide context as to what my friend Franco was saying, last year was a year where we sustained our momentum. We continued to gain actually more market share. We continued to grow. But just to put that into context, last year we launched about just a little bit under 4,700 housing units. And that translates to a sales or housing sales of 18 billion pesos. We'll provide some more details and context on that later. So this growth was primarily, the primary engine for that growth is actually selling those number of houses. So 4,700. Yet our housing secretary acknowledges that there's a 6 million housing backlog in the Philippines. So that means that even if there is zero demand created this year, it will take us several years just to give housing to the people who were looking for houses last year, the year before, and the year before that. And so what we're building into this demand, 5,000 last year, is but a small contributor, which gives us so much confidence that we have a lot of runway, a lot of room to grow, doing what we're already doing well. Allow me to start my presentation with our profit and loss statement. So here, I want to highlight that our total revenues grew 40%, so very strong growth trajectory just on our sales alone. Again, this underpins two things. I keep repeating that this is actually a lagging indicator. What our revenues are showing, and our accountants and auditors understand this intimately, is that we are simply realizing the peso value of contracts we have secured several years ago. We sold this a few years ago. We're recognizing revenues on a percentage of completion basis. So it underlines two things. Number one, these contracts are persistent. We're not getting as much cancellations. We're managing our delinquencies well, that these contracts are maturing into revenues we're now putting into our financial statements. And second, because it's percentage of completion, it also is showing that we are delivering on these properties. We're not letting anyone hang. As we deliver and as we build up the properties we said we'll build that we've already sold out, we're able to put and translate those contract sales into actual revenue numbers. We've done that by maintaining a relatively healthy margin. In fact, there's a slight improvement from last year to this year, from 46 to 47%, and our net income margin has in fact improved by 22 from 22 to 23%. This all translates to a consolidated net income after tax of 3.6 billion pesos for the CLI group, and that's up 35% from our consolidated net income last year. And to our shareholders, CLI shareholders, that net income accrues to us is 3.17 billion, and that is up 21% from 2.6 billion pesos last year. But I will quickly add that if I take out the one-time tax benefit effect of Create, if you just look at the growth in net income that we were able to generate from our core operations, we're actually talking about a growth of 32%. So from our base of 2.4 billion without that tax benefit, we were able to grow our net income to 3.17 billion pesos this year. Okay, next slide. And we were able to achieve this, and I just want to give you a little bit of a breakdown into this. I know this is a slide that most of you are familiar with already, but it does show the evolution of how we're diversifying and how we are continuing our growth. So even as we recognized 15.65 billion pesos worth of revenues, we actually increased our unrealized revenues. It's now close to 29.3 billion pesos. So again, based on a percentage of completion accounting method, what does this mean? This is actually what we have in the bag. This is what we have in our back pocket. I have close to 30 billion pesos of peso value of contracted sales that I have not yet recognized on my financial statements. And these are not projections. These are based on signed contracts from projects we have launched, of which we have the license to sell, that we are currently delivering. So thresholds have to be met, certain collection thresholds, certain construction thresholds have to be met. And this is how much more revenues, that's our runway for the next few years. The table on the right shows you a little bit of how we cut our data. We wanted to show you first how the economic segments are doing. So the yellow segment is our flagship Casamira brand, or economic housing brand. It ranges between 2.5 to 4 million pesos for a house and lot or a condo. So this is our economic housing. And you could see that in the last 2 years, in 2021, 2022, it has really carried CLI through the pandemic. This is where the demand is. This is where the backlog is. And this is the demand that we are addressing. And again, I mentioned this is a lagging indicator. So we're recognizing revenues from houses we sold 2 or 3 years ago, actually at the height of the pandemic. So that's a first insight, is that even when there was a slowdown in our economy due to the pandemic, due to certain macroeconomic issues, the demand for housing in that segment continued to be very strong. And if you look at where the geographical diversification of where our revenues are coming from, it is roughly 50%, a little bit over 50% are coming from areas outside of Cebu already. So I always want to add, CLI really only expanded outside of Cebu about 5 years ago, in 2017 and 18, when we launched our first project in Cagayan de Oro. And it is now such a significant part of our business that it makes up more than the majority of our performance. Next slide. And if the previous slide showed the numbers in our financial statements, which is a lagging indicator, this is now more of a current leading indicator. So reservation sales is the actual peso value of sales of how much we sold in that fiscal year, in 2022. So last year we sold 18. The revenue split in the previous slide. So that is underpinned by this chart right here. You could see that in 2020 and even in 2019, 2021, a lot of our sales were coming from the economic housing segment. But notice where a lot of our sales are coming from now in the year 2022. 47% actually came from our mid-market series, our Garden series. So the price points for this are anywhere from 5 million all the way up to 10, 11 million pesos per unit already. But it does show a broader based recovery across the real estate segment in Visayas and Mindanao. We're launching mid and high-end projects in downtown Cebu. We're launching beach town condominiums in Mactan, in Panglao, all of which are enjoying very healthy demand. We're selling them out. We're selling out condominiums in Davao na pinipilahan ng mga brokers. So this underpins that the broad-based recovery of the real estate market in Visayas and Mindanao. And if you look at where our sales are coming from geographically, you could now see that 34% is coming from Mindanao last year, 25% from Visayas, which is ex-Cebu, the way we count it. So that's almost 60%. 9% is in Palawan, technically Luzon, but still very much within our geographical area of expertise. And 32% is from Cebu. So slowly but surely, our expansion emanates from our headquarters. We're doing this rationally, we're doing this judiciously, because you have to build it slowly. We have to build our expertise, our network, and our ability to deliver on our promises slowly but surely. Okay, next slide. So this is a look at our balance sheet now. Our balance sheet has in fact grown by 28%. From 66 billion, it's now 85 billion pesos of assets. No? And it is underpinned by, and I highlight this, by accounts receivables and contract assets. The only difference between these two categorizations is when you say contract assets, they're essentially receivables but are not yet due and demandable. So imagine you buy a condo from us, you have a payment scheme. Even if that building is 50% complete, I'm not going to collect 50% from you yet. That's only due, it depends on what payment scheme you chose, right? So because they're not due and demandable, but we've delivered 50% of your contract, they're reflected as contract assets. Okay. And I highlight this for a few reasons. If you look at the amount of receivables and contract assets that I have versus the amount of interest-bearing liabilities that I have, and this is now, I will segue into a little bit of how I manage our capital, especially in an era of rising interest rates environment. And I know some of you might have questions about our debt equity levels and our gearing stability. This is what keeps the company very solid, and what makes me sleep soundly at night is that just looking at the receivables I already have on hand, that will be enough to pay off most of my interest-bearing debt. This is not even counting, remember the 30 billion of revenues I'm not yet counting on my financial statements? Remember, that amount is not even reflected here yet. Yet I know I will collect that. It's not counting our unsold inventory, which we're about to launch. It's not counting the value of the hotels and the offices and the retail spaces we're building that I can easily monetize or refinance with a REIT if we wanted to. So despite the increase, despite some concerns or some observations about our leverage, we know it is sustainable because it's already backed up by sales. In other words, when I approach my bankers, of which some of you are here, when I approach my debt funders, when we raise corporate notes and bonds and they ask, how are you planning to pay for that? My answer simply is, it's already paid for. People have already bought these units. All we have to do is deliver on these units and collect on them, and we will be able to pay these debts easily. And in fact, in most cases, you can ask this from our bankers, we pay them early. We pay them early because we have to pull out the titles for collateral so that we can give them to our buyers. Okay, next slide. And thank you. And this shows the effect of or where our debt management is right now, or our status of our debt borrowings at this point. With the issuance of 5 billion pesos in retail bonds last year, what we've really been able to do is we have rationalized and what I feel optimized our debt maturity profile. You could see that a lot of our debt maturity towers are pretty much spread out evenly some towards 2025 and 2026, but then we've managed to push out the tenor of our debt further on the longer end. It is undeniable that interest rates are going up. This is just the environment that we are operating in, which is why that we've made the concerted effort to actually get more of our loans on a fixed rate basis. We'd rather have that and not and reduce our interest rate exposure. So this year, do anticipate that any debt raising or capital raising activities that we will do this year is more of management of our capital structure and liability management as well, because there are opportunities to lock in more competitive longer term rates out there that saves us cost of capital. Okay. Next slide. Okay, so I'll be happy to entertain any questions that you might have regarding our financials and what I just presented to you towards the end of the presentation. But for now, I'll gladly pass back the floor to my colleague Franco for our business updates and milestones. Thank you.
Thank you again, Grant. So I'll walk you through our business operations and even our outlook. And we really want to spend time for questions from you, to make it very interactive, for you to get really first-hand information from us today. So we're still continuing the expansion of our land bank. You can see here we've managed to maintain our land bank at over 1 million square meters, and yet we grew assets or our assets from 7 billion to 85. This is really staying true to our acquire to the develop strategy. Whatever we acquire, we have a 1 to maximum 2-year horizon of a development of those properties. So we're continuing to add, but we're also continuing to develop these acquisitions. So you can see our land bank spread still across the Vismin with some presence in Palawan. So I wanted to emphasize that we as a company have really decided to consider Luzon, starting with the Camsur or Bicol or Batangas areas, where we feel that our affordable housing strategy can also experience the same success as we've had here in our region. So we are still around 3/4 of our land bank wholly owned by CLI and 1/4 under our joint ventures. So as you know, we entered into these joint ventures not just because of the asset-light approach, but because these are very prime properties that the landowners are only willing to let go if they partner with us. And we've been very, very successful at that and very patient with our partners. Next slide. So total CAPEX have reached 11 billion. So last year was our highest in terms of CAPEX, and we're looking at even higher CAPEX, close to 13 billion this year. In 2022, 69% of that was really into project development. Over 19% was in land acquisition and 10% in investment property. As you know, the company is still pushing to grow its recurring income, and I'll discuss more on that later on. Next slide. So if the numbers keep Grant helps Grant sleep well at night, this keeps me awake at night. No, just adding some humor to your day today. So not just keeps me awake, but keeps me excited. It's a very strong portfolio, still dominated by residential offerings, which range from the high end, the middle market, affordable, and socialized. And we've even gotten into what we call lower than socialized, which is development for the poorest of the poor. Now, we've donated already 2 condos for informal settlers in Cebu and Mandaue. On the offices side, we've now over 6 office buildings, and there are 3 offices here that are already contributing to that leasing revenue. The other exciting part is really the whole as we arrived this morning, Ascot has been 97% occupied. They're in the high 90s here in Ascot BGC for the whole 2023. In Cebu, it's already going up to the 70% as well. With our mixed-use commercial, this is where we as a developer have the ability to do residential, office, retail, hotel in one prime property. And we already have 10 of these in Cebu, Mandaue, Davao, and even in Bacolod. And of course, our townships are now coming online with DGT, now featuring our first residential component, a civic component, and a retail component. And then you have our Mingmori development about to enter pre-construction, and our Xavier Manresa development about to enter also construction or land development. Let's talk about real estate sales now and why we continue to be an outlier, or we continue to be that breath of fresh air, no, if you would like me to put it that way. So you can see here that CLI, because we only dipped single digit due to the pandemic, no? Our 2020, we were only down single digits. And now you can see here, versus 2021, growing 40% of our top line, not to 16 billion. The more important thing I want to highlight here is across all our inventory launched last year or in the previous years, it's 91% sold net of any cancellation or delinquency, 91%. So with that, it's like we need to find more projects. We need to launch more projects is the marching order in our company. And last year, we launched 19.4 billion of sales value. So the next slide is a very transparent snapshot of our real estate selling performance. So across 84 residential projects with over 34,000 units, this have generated over 106 billion in potential sales value, encompassing over 201 hectares. And these are 91% sold across the board. Now over 31,000 units sold. And you can see here how this has progressed. For those that were just launched recently, these are already 74% sold. Those that are under construction or launch in the previous years, already at 91, and for all our completed projects at 97%. Of course, this keeps me both awake and soundly asleep. No, really good results, but I would just like to say that it did not come easy. There's a lot of improvements we've made in the operations, instituting simple yet novel process improvements like during the pandemic years, really beefing up our customer services department. We have over 50 people just calls buyer to make sure they're okay with their payments, or do they need help with restructuring payments, or telling them that, hey, you should not cancel your units because these have appreciated value. Your units are ready. Simple things that, if it's not done, it will really affect the performance. So that was 3 years ago. So we've managed to make this customer service department even more fine-tuned. Next slide. So you can see here how diverse our offerings are. From our economic condominium in Palawan called Casamira Towers Palawan, it sold 85% in less than a week. And as of today, it's actually 100% sold for the first 3 towers in Palawan. Would you imagine? This is actually the first real condo in Palawan, delivered by CLI. We're about to start construction also in a month. And you can see on the right of that, Calle 104, a higher end project, sold out in a record 3 days, 2.4 billion. So there was a market-like atmosphere in our office that day. And you can see going down, housing is still our, I would say, bread and butter. It's something that we love doing. Now, so this is our Casamira housing model, and our Dumaguete is already 100% sold within the same year. Okay, we also did office condos. So usually office condos really move as it goes closer to completion. You've heard of our East Village in Davao. When Manila developer friends of mine always ask me how we are able to sell 4 billion in 4 days. It's really a combination of this located in our Davao Global Township, and there's not much supply really in Davao. And us really pricing it correctly, we sold this at 120 to 130,000 per square meter, but you get the advantages of a township, accessibility, parks, wide roads, and a well-designed development. So yeah, it's still 100% sold. And in Bohol, we launched an additional phase of our project, and it's 77% sold within the same year. So this is just a sampling of these projects we launched last year. So in terms of those under construction, this is where I'm busiest. We really carry out construction management in-house. So I have over 200 project engineers. Because the typical arrangement of developers is they outsource the construction management. No? Of course, they outsource the general construction, but they also outsource the construction management. In our case at Sibulan Masters, we do the construction management ourselves so that there is more accountability, more control over our projects. So our own engineers manage the contractors, and this allows us better reaction time to any issues, better to support to our contractors. So we have projects here in Bacolod, Iloilo Housing, Bohol, Ormoc, Dumaguete, Cagayan de Oro, Park Avenue in Cebu IT Park, and Paragon in Davao. The good thing here is these photos being shown to you are those that we are actually turning over this year. So lastly, on the completed projects, you can see us now really completing projects in several areas, creating that track record that is very important for a developer. Okay. So moving on to office and retail projects. So on the right is our Latitude Corporate Center, a 5-star Birthday awarded project. And it's one of the best looking offices there in Cebu. So we are still continuing our recurring income push. We still have around 30,000 gross leasable area, but over 47,000 more will be completed in the next year or so. Our target is this will easily reach 200,000 within 3 to 5 years. Okay. So maybe because a lot of you are analysts here, you might be aware that the office market is the lagging part of development. No? Office leasing is still picking up nationally. The good thing with Cebu is the supply is not as extensive. So for example, offices like this that finished last year, we are now close to 60% lease here. No? And it's still picking up some more. So we see some bright spots in the leasing and office market, but more in the CBDs that get more traction. Okay, this is the bright spot siguro, no? Where as office market is still picking up, the retail market is very hot. No? Meaning most of my retail spaces are fully leased out already because there's a lot of foot traffic. There is better, I would say there are a lot of more visitors coming in to the cities. So these are, of course, growing roster of tenants as well. Next slide. Okay, this is our Abaca Resort development that was awarded as Best Resort Development, even if it's still under construction. So you have a beautiful resort there. I can already tell you we can have our analyst briefing here when this is finished. But you have to pay, Grant? Or it's up to Grant. So the good thing with this is we really see the lack of internationally branded hotels in the Visayas Mindanao region. So we've already launched hotel projects that will reach around 1,542 keys. You can see our hospitality revenue growth now because coming from a lower base in 2021, so it grew 71%. Next slide. Okay, so the nice thing here, you can see in 2019 we just opened our first hotel, and then you can see the pandemic year we only had 54 million. These were mostly due to quarantine business or BPOs using the hotels. Then you now see the normalcy coming in. No, our hotels contributing 83 million last year. And then we have 3 additional hotels that will be operational this year with Life, Cebu City, Citadines, Bacolod, and our co-living brand, The Pad. And then you have our Radisson Red, Cebu in 2024, Citadines, Davao towards the end of 23, Mercure, Sofitel, Abaca. And we've answered this before, no? This is potentially a great hospitality REIT that can be assembled by CLI. Next slide. This is a shot of our Davao Global Township with the 30-meter wide road right of way here. We are opening the roads finally to the public this May. So in our Davao Global Township, we already launched our first condo there. That was the 4 billion in 4 days accomplishment there. We are already building our retail pads here, and the leasing interest is very strong here. So next slide. So this is a perspective of that Davao Global Township. Then being shown to you now is our Manresa development, where this is a collaboration with Northern Mindanao's leading university, Xavier University. They will be building their Xavier Masterson campus from only 7-hectare campus in downtown Cagayan to now over 20 hectares plus 15, over 35 hectares with a forest reserve. And CLI has the adjacent commercial district or mixed-use district with 14 hectares. So we will be launching our first residential offering there in a few months. Then lastly, you have the Mingmori Techno Hub. That is in the pre-construction phase in Cebu. So moving quickly to significant milestones. We got a very good timing with our maiden retail bonds here. That was really issued last October 7. No? You can see the interest rates there. Hopefully, some of you are also our bondholders aside from shareholders. Next slide. And we're very honored that with the independent market study here by Colliers, among many studies, we have the highest market share in the Vismin area. And these are backed with in supply data, or they would say absorption data. So we're very honored with that. And this was accompanied by another Best Developer in the Visayas Mindanao Award by the Property Guru. So in 2022, these were the 16 projects we launched. You can see the variety from beach town condominiums to affordable housing to mixed-use projects. So it was a very busy, very productive 2022. So the good thing here is we are not only getting sales from newly launched projects, we're also getting sales from existing projects. So a lot of inventory is actually moving. And you might see that theme among developers. No? There is really a strong interest in real estate. So the next slide would show you the various awards we received. It's just lacking the best developer in Luzon. That's why I'm very motivated. Kidding aside, we feel we are ready to take on the big Luzon Island. So quickly on outlook, I'll share this with Grant on the outlook for 2023. Okay, so 2023, we really want to continue the momentum. And it's backed by a very strong push from our national government. So if we launched 19 billion worth of projects last year, we're taking it up a gear higher now with 29.75 billion in project launches. Just to be very, just to share with you, in the first quarter alone, we already sold more than 5 billion in new reservation sales. And this is coming from existing inventory. So we are really going to ramp up very strongly in the coming quarters. So leasing, this is just 4,000 square meters from our Davao Global Township. This will inch up to 10,000 with the completion of the Davao City Center. The hospitality side is quite exciting because we're opening 3 more hotels, especially with the Citadines Bacolod, that's over 200 rooms, Life with over 180, and the Pad with over 150. So with CAPEX, with the sustained momentum, with I would say with the heightened demand that we see, CAPEX will increase to 13.5 billion this year, mainly for project development at 83% and land acquisition at 11%. So the exciting part, maybe this is where I pass it on to Grant on collection and financial performance. Go ahead, Grant.
Yeah, on collections, we're forecasting collections of over 10 billion pesos. And this is, when we say collections, this is really the delivery of units which prompts a full payment of their contract, plus the monthly collections that buyers are paying into their contracts. Next slide, please. And here you could see that we mentioned that we're very committed to building out our portfolio in the recurring income business. So we've always said that starting this year, you will see more and more of our revenues and therefore income and cash flow coming from these significant investments we've made into hospitality start to contribute to our bottom line. And this will underpin our maturity into a more well-diversified and a more well-spread out real estate developer. So starting with the Pad, which is a co-living concept in the heart of Cebu. Second Citadines Hotel, this in Visayas in the Vismin area. This one is in Bacolod. And then a third hotel that we're opening. This one is called Life. This is under the Ascot brand, the same global hospitality group from the Ascot group that owns Citadines. We're launching this in Cebu. Okay, next slide. And we want to expand our gross leasable area, starting with this phase 1 of the Davao Global Township, where we'll really put up retail spaces and commercial areas. And again, I think this is something that we've been saying all along, that we want to diversify it. This will underpin, or this will form the foundational assets of when we will eventually do a REIT. And one thing you do notice is that we are building our recurring income assets organically. We're not really acquiring them. We're building them from the ground up. This sets the stage for what we feel will be very good outsized returns once we get a REIT type of valuation for these recurring income type of assets. Finally, we want to show you that the newly completed projects that we're going to deliver this year in 2023, this is where our operating cash flow is really going to be strengthened. To those of you who want to get a little bit more detailed into our financial statements, you can actually see our operating cash flow starting to ramp up. And what that really means is that the amount of cash that our normal operations are generating, our sales and our residential assets, is ramping up. And this just goes to show what we were saying earlier, that our business lends itself to very strong visibility, not only of revenues and income in the next few years, but even of cash flow. Okay. So these are the other projects that we are completing. So we're just showing you that they are on the verge of completion. These are the projects that will contribute to that 10 billion internally generated funds of collections that we will be able to generate. Team, can you allow me to share the screen? Because actually at this point, I know that some of you are looking at our projects, but I do want to take this occasion to announce and maybe to pique your interest in something we've been planning since 2020, but was put on hold during the pandemic. And that is, we've been planning to organize an investors and analysts road trip to show you our projects in the flesh since 2020. We started planning this early 2020, but we all know what happened. Travel was suspended. It's probably not a good idea. So now that travel has opened up, the first thing I want to show you is we invested in these technologies to not only for our buyers, no, but also to our for people like you who might be following CLI. Have you ever wondered what a 2.5 million peso house and lot looks like and why this is such a bestseller in Visayas in Mindanao? Please go to our website, and yeah, it's showing here. So for example, you click something like this is a virtual tour. These are what our economic housing projects look like. Let me just show you very quickly what amenities we give. So again, this ranges from 2.5 million pesos to 4 million pesos, depending on the size and the cut and the position of the land. No? So we're talking about, yes, affordable and economic, but it's not cheap. We actually give more for the Filipino family. This is the kind of lifestyle, the kind of aspirational home ownership that we strive to give them. And if you look at, for example, a typical model house that we're able to deliver. By the way, what I'm showing you are actual real pictures of a finished development in Cebu that we did. This is our flagship Casamira brand. Okay, and again, this is technology we invested in during the pandemic. So if you were a potential buyer, even an OFW, you could actually start getting a good idea of what 3 million pesos can buy for you. And given our very competitive, very attractive payment schemes, ito yung sinasabi namin, this is affordable. This is something that you can aspire to. This is something you can get. And as a developer, we develop and we deliver livable, ready for occupancy units. So paint finish, tile finish with fixtures, doors, windows. We don't deliver just a shell. We deliver the complete package for your family to be able to move in. So what you saw were just two sort of views on it. One is bare, which is how we deliver it. One is dressed in. This is just a conceptual mock-up where we give you a little bit of inspiration. We show you how your unit could potentially look like if you invest in a unit in CLI. So why do I show you this? Because this year, we're going to organize and invite all of you. You can make your way down to Cebu. We're going to put together a little tour group. We're going to put you up in our hotel in Citadines in Cebu. We're going to take a couple of coaster vans, and we are going to invite you to take a look at the product in the flesh. What is it that makes Cebuland Masters products sell so fast? And I don't even exaggerate when we say that our selling events are like Apple sales events. We have brokers who literally bring sleeping bags in our showrooms so that they could get the first reservation numbers when we launch a project. Now, you see a project like this in Cebu. Okay, so this is our flagship subdivision. And people ask, if you ever wanted to see the fundamentals of it, we've always been a company where we want to deliver on our financial performance, our fundamentals. You'll see the results. We want to show you the products, and this is it. So you take a project or a product like this, and then you multiply it and you scale it up. This is something we've perfected, whose plans, whose designs, whose costings, engineering methods, pricing methods, we have been able to replicate. And now we have, how many Casamiras do we have, Franco? Siguro, all over Vismin. I think we have
over 15
over
already.
15 already.
More,
So
yeah.
we have this in Iloilo, in Bacolod, in Davao, in Cagayan de Oro, in Bohol, in Ormoc, and we're going to launch this one in northern Cebu. So this is the kind of scaling up and scaling up business model that gives us confidence that our growth trajectory can be continued. So I wanted to show you this because not only am I highlighting the outlook for 2023, but this is something that I want to give you a teaser on, and we want to inform you that we're planning for this. If it's not, we're planning for this sometime the second half of this year. We're going to send out an invitation. If you can make your way down to Cebu, we're going to organize a big tour group. We're going to show you the projects that we're doing. So not only our economic housing projects, which of course forms our core business, we're going to show you some of the condo towers we're doing, the hotels that we are building up, to show you what are the products underpinning our financial performance. And I can't wait to see all of you there. So on that note, we would like to wrap up really our presentation and open the floor for Q&A. Again, to a lot of familiar faces and friends who are following CLI, our fellow shareholders, thank you very much for your time.
Yeah, but we can hear you from your seats. I think there's a good acoustic, so feel free to just ask a question from where you are, and we'll be happy to interact with you.
Sinabi natin, yung may questions may give away.
Grant, there's a question.
Yes, please.
Good morning. Yeah, so Michael Hilado, Firma Properties. We met in the Pag-ibig Awards. So congratulations for the very good performance. And I'm just curious, as with the major property developers last year, especially during the first half, there were a lot of cancellations. I'd like to know how much of your total revenues, how much cancellation, what's your cancellation rate based on booked revenues? And on your cost of sales, I do realize that a lot of your interest expense is capitalized. So how much of your cost of sales is capitalized interest? Thank you.
I think, thank you. I think those are both questions for me, no?
Yeah.
We've monitored this. Thank you for your question,
Mike.
No.
From
Okay.
Finma.
Yes, from Firma. Thank you.
Okay. Actually, our cancellation rate is one of the things that we're actually quite proud to share, and we monitor this very religiously, because I mentioned that if this my sales contract basically gives me the runway and tells me how we could manage the company effectively and how bright the future is, then a lot of it is underpinned by how well we monitor our delinquency rate and how that goes into cancellation. So I actually give you a bonus answer. First, I want to tell you about our delinquency rate. Our delinquency rate in 2021 was 5.26%. It has improved to 3.81%. It means that even as our portfolio of buyers grows, our portfolio, the overall health and status of our contracts and our accounts have actually improved coming out of the pandemic. So it's 3.81% of contracts are in one way or another behind on their payments. But that's a very healthy number for us. On the cancellation rate in 2021, it was 4.4%, and in 2022, it ticked up slightly to 4.67%. Now, I will hasten to add that 4.67% is, it means that in any given year, the amount of contracts we have, I have over 32,000 live contracts right now. About 4.67% got canceled last year. I'll hasten to add that, but we do monitor a second number that is attached to this, and that is what we call a recovery rate. A recovery rate is the velocity at which we can resell a canceled unit within a 12-month period. And our recovery rate is actually over 70%. So, which is why, if you remember that, can you please go to the slide on our residential sales? The one where we're showing ilang percent sold tayo. One more, a couple more, I think. There we go. So take a look at this. This is why at the end of the day, there's some churn in the accounts. I call this life happen. People change their mind, they relocate, maybe they choose to get another unit. At the end of the day, 97% of our inventory gets sold out. And so with the combination of this cancellation and delinquency rates, we're able to, we're actually able to manage and feel very comfortable that our business is sustainable. And I'll enhance that answer one more, because most of our buyers are what we call primary buyers. OFWs are about 40% of our market, but first-time homeowners. So if you ask their profile and the purpose of buying a house from CLI, when we say primary buyer, it's for them, para sa asawa, anak, para sa magulang. So they're not gonna flip, and they're highly, highly motivated to keep the contract. So if anything, they are the ones asking us, please don't cancel my contract. Is there a way I can stretch my payment? Can you give me a little bit of grace period? Because we want to keep the contract. We want to move into the house. We want to take delivery on the house. So how can we do that? So I think it's that dynamic that sets us a little bit apart, and those are the dynamics that underpin our numbers. Thanks for the question. I hope I
Thank you
was
very
able to
much.
answer your question.
Yes, thank you very much.
And I'll add, because I'm aware of how other developers are also managing. They say, some report that they're in the high teens in terms of delinquency or cancellation. I would just like to point out that Vismin, the supply is really lacking. So for example, in Cagayan de Oro, where we're quite strong at, in the whole 2022, I think there were just 2 or 3 new condo project launches, and you're catering to a 1 million regional population. So that's probably why the cancellation rates or recovery rates are very good in our region. I think there's a FINMA project in Cebu.
Yes.
I know. I think near the school, no, near the Southwestern. Yeah. Okay. So I think it's a middle market condo project. So yeah, I think that's the opportunity for developers in Manila looking there. No, that and as I mentioned earlier, in the first quarter this of some delinquency. So I see a very, very exciting 2023 for the industry.
All right, thank you
Oh
very
yeah,
much.
there's a second question. Interest cost, how
Oh,
much
yeah,
are we
capitalized on it.
capitalizing?
Yeah. 2
I'll
to
give you a
3,
little bit
yeah.
of breakdown. Yeah, you're right. It's a little higher actually. It's about 4%. 20% of our cost of sales is land. About another 18 to 22% are actual construction materials, steel, cement, and everything else that goes into that. And then you have design fees, costs, permits, architectural fees, and then capitalized interest is about 3 to 4%. So even if the increase in interest rate will have an effect in terms of squeezing our margins a little bit. That's just something that it's part of the business model of real estate companies. But it meant with a margin like 46-47%. We're very confident we can maintain our profitability. We'll continue to be very profitable, and it gives us that room to slowly transmit that inflationary effect to our buyers. We can afford to test the market and say, if I increase my prices by 2%, 5%, how much does it affect my sales velocity? And as soon as wages are able to catch up and that inflation transmission can be transmitted to wages and everyone's wages goes up with inflation as well, then that will be the sustainable way we can increase our prices as well.
All right, thank you very much.
Thanks, Mike.
Thank you for the presentation and for answering the first question. Just to follow up on those, you mentioned 40% of your revenue comes from OFWs. How much would be, let's say, BPOs, or is there any? Could you trace the industries where your clients work? That's the first question.
Yeah. Yeah, in terms of that, 40% is our average. No, I would say it's more for housing. More 60% is OFW for housing, but for condos it goes down to 30% OFW, and then on average is 40%. But if I would have to break down into, it's varied. I mean, in Davao, the BPO market is quite small, no? Whereas in Cebu, you have probably 1 million BPO workers. So, do you have it there, Grant?
No, actually, I was about to say it really depends on what island. In Iloilo, the BPO market is so strong that the proportion of BPO markets would be very high. But it more or less mirrors the local economy. What we're really monitoring are local demand, OFW demand. No? So we don't have that breakdown. Actually.
For example, we just launched a project, Calia 104. It's beside the Veles Medical College. 70% sold to doctors. They got by the floor nga eh. So, daming pera ng mga doctor.
They pay cash eh.
Yeah. So, no, zero delinquency, that project. Zero. So
we sold that out.
Yeah. So, but I think the easy to track is really OFW. So I would say, they are. There's a strong comeback from the OFW market. Very robust market for us.
So on OFWs, please correct me if I'm wrong. I think remittances are growing around single digit, right?
Yeah.
But you're growing double digit. So
Yeah.
that means you're grabbing market share from your competitors.
Where did the OFWs come from? They're not from Metro Manila. They don't live in NCR, right? If you think of where are seafarers coming from, they're from Iloilo and Bacolod. So the answer is yes, we
Yes.
are. That's why we're number one in market share.
So on that, would you be able to share any aspirational market share? You're 21% now. Any target you have in mind? And the next question on market share is, would you be able to describe the competitors that are losing share? What are they doing wrong versus what are you doing right? Just for us to visualize the landscape.
Yeah, good. My quick answer to that is we notice some national developers taking it easy in Vismin. Probably they're recalibrating more on their NCR or Luzon projects. So that was noticeable. And I believe our extensive market study is uploaded on Edge. Sorry, yeah. Oh yeah, so these are the national developers that were highlighted. SMDC, 14%, Vistaland 7, Ayala 4. Don't want to mention any names, but I think some of these national developers that you see decrease market share, slow down on their Vismin launches. For example, I can point out that we call Ali like our big brothers there, no? Because our CEO was a former employee of Ali. They did not launch anything new in Cebu last year, so that's one thing. So no new condo, no new residential project in the entire Cebu. Right.
Yeah, to add to that,
Yeah.
we don't really we've never said a certain market share is our target. We've always thought that if we focus on delivering on our internal targets, which is a growth target from how we did last year, it will happen naturally. And we also did notice it's a matter of focus. Where during the pandemic, we doubled our intention and our commitment to the markets, where our senior managers, our vice presidents, really spent time to work with local government units, suppliers, and contractors to make sure our projects can continue operating. Versus, okay, again, no names, but versus, say, another developer whose headquarters is in Manila and there is an order to just say, just shut down that project, or maybe, workers are not coming in, sige, let's just delay the project. Compare that to a hands-on approach where actually Franco himself, our chairman and CEO Joe, would talk to the local government units and say, let's find a way to move this forward because we need to balance both economic and livelihood considerations with health considerations, right? I think we all agree that at some point the Philippine policies, we kind of overshot how we would react to COVID. And we were on the business side saying that, teka lang, there must be a way that we can balance certain interests. So you compare that approach, it has allowed us to step in and really fill a certain vacuum without necessarily deliberately saying, we want to be bigger or better than anyone else. It's just, we know there's demand, there's a niche demand in these places we're serving, and this is the result of it.
Just to clarify, are you the single largest block of share in Vismin? The 21%, is that number one?
Yes, it is.
Yes.
And I actually like that number. It's 20. We're number one with 21%. So it keeps us on our toes, right? It's a tenuous number one. How can we want to be a bigger number one? But again, it will happen if we continue our focus.
So just a quick example, no? Let's say last year our market share or our supply was around 19 billion. So you can imagine that I guess the market in Vismin is 100 billion market yearly, right? So we're going to 29 billion in new launches this year. So it's either we get more of that market share or our peers also launch more. But we're very confident in our speed, no? We will be faster to market all the time because we're there. And because Grant and the organization is very in sync, is how we do it. And even our regional offices are just as in sync as our main headquarters. So that's a very big market, no? The sad thing is, I think the real estate to GDP on the public side is very small, but I think that will improve because there's really a good push from our national government to help that. Hopefully, it will speed up really in terms of ease of doing business, permits. We're very hopeful.
Just a few more questions.
No, please. And as many questions. Our first face-to-face in a long time.
It's really encouraging that you're saying that you're filling a gap that the larger developers have left behind. And would you be able to say that the shares of those national developers, did they fall from, let's say, from 2019 and you rose? And also the 51%, how many competitors are inside that 51%, and how did their share change?
Yeah, a lot of the 51% are local smaller developers actually. No, these are doing 1 to 2 projects at a time. And yes, I can confirm that the numbers of those other national developers were definitely much higher in 2019. So these numbers reflect launches or supply. There's also another take up. Sorry, so this is take up now. So sales take up. So definitely they would have less sales take up because they're launching less or they have no more launches. Yep.
And just the last question. It's okay if you can't provide the number. Would you be able to say the average salary of your clients, just for us to think about it when you price your products and with competitors as well?
Okay. Yeah, I'll answer it quickly. So maybe on the Casamira, our economic, so we sell units at 1.5 million to 3 million. So I would say their combined household income can be as low as 20,000 to let's say 40,000. Then we go on the middle market, that's 2 million to 6 million peso unit. Maybe household income of 30,000 to, I would say, 100,000 pesos. Then anything high end would be household income 100 and above. But what's interesting is our affordability. We're the developer that gives more. So we do installments of just 15% down payment spread over 36 months at 0% interest. So if you have a 2 million peso unit, 15% is 300,000. Divide by 36 months, that's just less than 10,000, or it can go as low as 5,000 a month. And then this is where we work very closely with banks. End users are always long-term in their thinking. So they get a 20-year loan through Pag-ibig, 25-year loan, and the amortizations become very attainable. I mean, that's always the first dream of the Filipino, and we just try to make it as attainable as possible. And of course, there's I was waiting for a question about inflation, right? Okay, so of course costs have gone up. So we're also doing our part to make sure that our increase in selling prices are reasonable. Now, we don't want to burden our hardworking Filipinos, so we're still managed to keep our margin while maintaining that affordability. We go into the detail of analyzing the tiles prices, to pipes, to cement. So developers really have to go into the small details to make sure we still give good value to our buyer in spite of the inflationary pressures.
Thank you so much. Thank you.
Yes, thank you.
Morning. I'd like to ask first about, let's say, restructuring of buyer payments. So mortgage rates have gone up in the past 6 to 12 months, and particularly the past 6 months. So I'm quite curious if some of your buyers who were due to take over their unit and then transfer to a mortgage, have some of them had trouble getting a mortgage because the amortizations would be higher. So has there been an increase for you? I presume you guys will restructure them if in those cases. Has there been an increase?
Good question. Yesterday I had a meeting with my takeout team, or we call it accounts management or loan takeout. The interesting thing is, even if interest rates are at 6.75, some banks are still offering good promos, 7.5. Buyers know that their units have appreciated. So meaning, let's say our condo in IT Park, Cebu, we started selling that that's just 3 million pesos, now it's 5. So they're getting a loan on 3 million, but the value of their unit is 5. So they would really take out that loan because they're already ahead, right? They might feel the pinch on the interest in the near term, but they're already ahead in terms of their resale value. So on the average, our units appreciate by 30% from pre-selling to completion because well located, well designed. So this is usually how we educate buyers. You sure you're going to give up your unit? It's already worth 1 million more than when you bought it. The good thing is we are very hands-on with the loan. We call it, we're the ones that help endorse buyers to bank. So give them 4 options, 5 options, structuring. So usually usually our buyers that are really, I would say, in difficulty cancel even before then. We like to clean up accounts before they reach that point of it's completed and they realize they cannot afford. So we usually clean it up at the early part of buyers buying, Grant. And you want to add anything to that?
Yeah, and actually, I think it's important to reiterate that I think we're the only, if not one of the only developers who does not offer in-house financing. So in fact, if a buyer cannot qualify or get a bank loan or a pag-ibig loan at the end, the logical conclusion there is a cancellation, or we encourage the buyer, maybe if you want someone else to take over your contract and at least you get reimbursed some amount from that new buyer, you can do so. So in fact, if you combine that insight with our cancellation numbers, some people might say, oh, sir, cancellation numbers are high. Actually, we keep it low. No? Again, because buyers do understand that when they enter into a contract with CLI, they don't do it, we don't get speculators, and they do it for long-term ownership. Now, with the increased interest rates, the other consideration is, what's the alternative for our buyers? They could keep renting, but the rents have also gone up. So the point for them is actually the increase in interest rates and how it translates to monthly amortizations. Yes, monthly amortizations may have gone up, but for them, the calculus still ends up being, but it's still a superior option. I'd still rather get my own place. I'd still rather move into this and get a property that's well maintained, that's appreciating in value. And even if interest rates have gone up, if you amortize that over a longer period of time, that is something that they can absorb.
And I'd like to ask this time about the prospects for your different brands. So you're planning to launch maybe 50% more in terms of value this year versus last year. So clearly you're quite optimistic. So I'm quite curious which of the brands you expect to lead. And related point there, from what I can tell, your premier brand saw a drop in sales, in reservation sales last year. So where do you see this heading? And by the way, what was the reason for? Was it a demand issue or a supply issue for you guys?
Yeah. A great question. When it comes to the premier side, or I would say the high end, it's really an investor market, and the appetite for investors is, I would say, more calculated. Now they don't need it right away. They need it. They want it because they see a good deal. So that market, I would say, is the one waiting out these inflationary and all that. So we really focus, of the 29 billion this year, majority is in the economic and middle market that we are launching. Because these are the end users, as Granted pointed out, affordability levels are quite manageable. So you're looking at 2 million to 6 million pesos. And going back, connecting it to your loan question, like in 3 years' time, with the banks will give good appraisal values for its units, such that even the loanable amounts can cover up to 90% of the unit price. So that's the answer pala, no, na, because the unit appraisal values are high, so up to 90% of the unit price can be taken out by banks. So but this is also where, let's say Davao, our premier project sold 4 billion in 4 days. So you're looking also at certain localities where there's not a lot of premier projects. No, ours was only already two premier projects in a city of 2 million people. So we are that kind of, we're not inquisitive lang. No, we are really looking at the supply figures where we develop.
And another question for me, last one. In your case, so again, you're so far in Vismin, and let's count Palawan for now there. Did you see an increase perhaps in construction workers? For instance, my understanding from the other developers is that perhaps there was a decline in Metro Manila. So I was quite curious if, let's say, you would corroborate this, that in fact, over the past 2 years, it has been easy to get, construction.
To be very honest, they say that many of the Vismin workers came home and just stayed home because salaries have also gone up. So cost of living is lower, whereas the economic benefits are higher. So That's the beauty of Cebu, right? We're a bit spoiled there, but this is also where my answer is there are more workers for good employers. No, so if a developer like CLI with good track record that pays well, that pays on time, of course we can easily get workers. Never a problem. So we have a lot of repeat contractors who trust us. If I would have to count the number of construction workers, because I have 30 projects under construction times, let's say, an average of 1,000, I'm helping 30,000 people in a way right now. And no issues so far. So this is where we're very disciplined lang with the contractors. We shy away or we avoid small contractors because these are the ones that might have, cash flow issues. So thankfully, we're really partnering very well with contractors, and we know who the good ones are.
Thank you.
Thank you. Are you from the real estate industry or on the? Just kidding. Just kidding. Good. Thanks, Carl.
Good afternoon. Edwin Salam from Business Mirror. Can you highlight some key projects and initiatives that contributed to the strong financial results of Cebu Land Masters?
Yep. So probably the very strong point is our strong delivery, because these results reflect not just sales but also construction progress. CLI has managed really to deliver strong accomplishment, no? Because we are, I would say, partnering with the best local contractors, have good volume from all the local suppliers. So our accomplishment was very high, no? Then accompanied by the very strong sales. And the big contributor also is a lot of our sales are the focus on the middle market, is the big demand driver in Vismin.
One last question. Property demand in the Visayas and Mindanao region, and how do you intend to expand based on that outlook?
Yeah, well, the outlook is very bright and rosy. From 19 billion that we launched last year, we're looking at 29 billion worth this year. So that's almost 50% more that we're launching this year. And these are already identified projects with business plans, with permits we're applying for. So it's only a matter of how fast will these cities approve our permits, and we're ready to go. 29 billion of economic opportunity for those cities there. So it's very bright because, as you said, there was a good question about delinquency, no? So it's really getting very low, meaning it's in the clear, no? And when we say new launch this year, they are not going to feel any interest rate pinch because they are buying units at 0% interest, right? And their units appreciate. So there is that buying opportunity actually, and that kind of beats inflation. No? Yeah.
Thank you very much.
You're welcome. Oh, hello, sir.
Hi. First of all, let me comment now. It never fails to impress me how contagious your energy level is. Really, it's really.
You train Grant well, eh?
No, I mean both of you,
Okay.
right?
Yeah.
So I guess my question is more not as may not be as related to the fundamentals that most of the analysts are providing you right now. My question is quite different. I'd like to know, because this actually initially came from Grant when he joined you, that he made it his mission to go out to the investor market, right? To educate the potential investors, maybe more on the retail side.
Yeah.
So I guess my question is more on maybe Grant or Frank, right? I am very, very impressed personally, right? But there are a lot of people out there that may want to to look for companies to invest, and this is a very good story. which I don't know how successful have you been
Yeah.
in trying to educate and penetrate these type of investors.
Yeah.
I know that you've had some successes. Your share price actually went as high as 4 over. But unfortunately, we're now back to around 2 something. But there is still so much possibility based on what you've been showing.
Yeah.
So I guess in a way, that's a different line of questioning, because there's also so much importance in marketing, not only the properties that you sell, but marketing yourselves.
Yeah.
So
Yeah, Bernard, very good question. And it's something we also ask ourselves, right? We're trading at below 3 times PE right now with the results we announced, because I think our earnings per share is 90 cents and our stock price is 2.5 with the adjustment from the dividends, no? So yeah, I mean, that's for smart shareholders like you to recognize. But of course, to be very honest, we've been very busy focusing on our operations, and that's why we're here. And we're gonna make a stronger effort to reach the retail market, no? As far as invest shares, we've definitely been interacting with a lot of institutional investors, but part of because there's already like 6 years of track record from IPO, which Bernard was very helpful as from the BDO side, right? There's a lot of a story to tell. No, there's a track record to show for. So we're actually opening really an investor relations office this year, finally. Meaning we don't have an office in Manila. That's one of the first, I guess, gaps that are here. So we've been really busy doing that part, and our hope was that the market would take good notice. I think, yeah, as you said, no, it would reach as far as 4, but we know that our value is much more, and there's going to be a more concerted effort, definitely, to talk about it. And Grant, from your side, from the corporate finance side.
I'll be very honest and say it is the one area where we've not gotten to the point where I really want to take us to, for a few reasons. One, again, I mentioned, I really do believe, especially when it comes to retail investors, out of sight, out of mind. So for retail investor, go to Call Financial, or, trying to get things out. What stock do I buy? Everyone knows what a Jollibee is, Globe, Ayala. And you talk about Cebulan Masters, and you don't see our projects here unless you've been able to see it, physically for yourself with your own 2 eyes. It's hard to appreciate the value of that investment you might be making, given that you might have other choices. So I'll be the first to acknowledge that we have some work to do there. And one of the things that we want to do, and this is why I announced it already, is that we plan to finally, again, push through with a physical office here, not only to entertain investor relations questions, but we do have a lot of Manila-based buyers buying property in Visayas and Mindanao. And second, when we finally organize that investors and shareholders tour group to show you our property. So those are a couple of initiatives that we want to do. I will add one thing.
Yeah, go ahead.
In terms of institutional interest in CLI, if only I had $1 for every asset manager said, Grant, I'd love to invest in CLI if you can only reach a certain market cap and a certain liquidity and trading depth. So notice their buyers are not fundamental. They know our growth. They would love to take a position in CLI, but they're looking for technical indicators and saying that our mandate says this is ito yung market cap, ito yung trading volume. So I know there's a lot of pent up demand that could easily snowball once we reach a certain threshold. And we do have some, I have certain internal goals and milestones. I want to be included in certain indices and certain benchmarks that will compel a lot of the volume to come out. So it will, these are steps that we want to take in order to make it happen. But when it does happen, I think we've set up enough of a foundation and enough of familiarity with a lot of institutions to say, I think once we start the ball rolling, it can easily be sustained.
If I may just share with you an observation, right? I'm sure that you can do it. Because as what Grant mentioned a while ago, kung pinipilahan parang Apple event ang open house nyo, right? If you just focus the same way in trying to do this for potential, initially retail investors, I'm sure you can do it. And I guess a sign is here. We have media, we have the brokers here. We have done our client events for you. So I'm just saying that, just have to reach out to us and focus on that. And I'm sure you can do it. And that's personally our institution's commitment to you in trying to make that happen for you as well.
Yeah, thank you for that. And we share the same, sentiments. So this year, actually, CLI will celebrate its 20th year. So part of our goal is to, increase or improve our shareholder value that way. Our success in our financials, our operations should reflect in our share price, and we're very committed to that. And that's why we're even saying, if Vismin is a 100 billion market and we have 20% market share, the Luzon is actually ×2 or even bigger, and we just love 10% of that, and that's not even in our financials. So we are really expanding to Luzon. So we're now starting to look at properties, and you'll see that contributing to our performance in the coming years, and that will mean we're more here, closer to the bigger retail market. And yeah, we also need your support. Please continue to spread the good news. We have one of our shareholders. Please go ahead. I know it's 12:30, so maybe a few more questions. Yeah, please go ahead. One of our loyal shareholders.
Sorry, I just need 2 minutes. I first met Franco when I went to your investor briefing for the IPO.
Wow.
And then you were looking so much younger then.
I have gray hair now.
Yeah, but what's different is even if your business grown bigger, I can feel the same warmth from how you explain things from before. And then I went to Bernard, and so far I kept my reservation with BDO. With me now, with the IPO, and I kept the same shares, and I have more now. I just received my bond interest last April 9. I bought your bonds, and what I feel different with the company is growing big, and the heart is still from it feels like family. So it's so happy. It was not planned. I just saw this, I kept it, and I saw Bernard. I lined up for him. I went to BDO to their office to buy the IPO from Bernard.
I'll actually add to that. Because it feels like it is family, and
yung lunch first is served sa sir, boss. Doon muna first nakasardo. No, but we're very proud to have shareholders like you really keeping track of us, spreading the good news about us. And as you said, we've returned a lot back to shareholders. So we've actually returned more than how many billion in dividends? More. Yeah. We've returned so much to, I think, shareholders already, but this is the commitment really from our board, our executive committee. It's really to reflect our value better, and then we're gonna keep communicating with you, and likewise we need your support as well.
It feels like, because it is family. Franco, how many homeowners association are you a part of? No, honestly, this
yeah, in terms of condo corps, maybe because we really turn over to residents now, meaning we have elections, but usually 1 or 2 CLI members stay behind. So I'm president of 7. I have another meeting next week. It's at the function room of our condo, but it allows us to understand really the plight or the needs of our buyers. In homeowner associations, the developer is not allowed to sit on the HOA, but we still manage all the 35 residential projects we developed. We're still managers there. We have a property management contract with all our HOAs. We've never been kicked out, although we've given in the hundreds of lechons, because that's how many Christmas parties and fiestas, no? So we keep track of the number of lechons also we give to them. Yeah.
For a question.
Yes, please. Hi, how are you?
Actually, I'm not here to ask questions. I just like to share to everyone that CLI, I just knew about them last year because I'm a member of Phoenix and a director, and we had this search for the best CFO of the year in the entire country. And I'd like to tell everyone who doesn't know that CFO Grant Cheng was the first one that was awarded for non-big conglomerate, and from outside of Metro Manila. Yun. And, meron pa. A youngest. Most handsome, pwede na. Pakainin ako uli ng lechon. But this is what I have to say. When I was getting in the CLI, I knew about them some years back. I asked somebody who knew them, tapos it came across as parang snob. Parang snob sila, ayaw makipag-meet. Sabi ko, talaga? And when I met them last year or the other year, it's totally different. The family is very nice, from the tatay to the anak and to everyone. So I think for budding investors and investors, advisors like Bernard here, my friend, CLI is a good company to invest in if you look long term, not the short term, not the mga what do you call them? Mga gambler type of investors. So I think it's a good one to be into. Yes. Nice to see you guys.
Thank you so much. Maybe a few more so we can have lunch.
Maybe one more question before we end.
Yes, please go ahead. Yep. Oh yeah, yeah. So yeah, we are one of the staunch supporters of the green building movement in Cebu. So we do have one 5-star Verde rated building. We're eyeing a LEED Gold Platinum of our SOM designed building. So CLI is also shaping the skyline in Vismin. We are not doing big boxes now. We're doing beautiful structures. So we have a Master's Tower is the first SOM design project. Cebu. So probably we have 4 projects with Verde certification. And then we're working with IFC on their EDGE certification as well. We're big believers and advocates of that. Yep, go ahead. What is the? Oh, so we 80+% project development. So complete construction to make sure these units go into the are realized for these hardworking Filipinos, and then 15% in land acquisition. So hopefully we can really acquire a nice Luzon property very soon as well. So it's 80% construction and project development. So last year was 10 and a half. So this year will be 13.
13.5.
So that's a big 30% more. Yes. Yeah. No, and as many as you want, then or we can also have a chat after. 1 million a year. Yeah. Yeah. Interesting you asked. I had a one-on-one discussion with him. Very passionate. I think very action-oriented, and we're hopeful that this will translate to legislation and regulations that will speed things up. We're very confident. So he wants to do not just because the previous admin was what we called rental units, no, for informal settlers. Then Secretary wants ownership. So there's a segment below economic, no, so the socialized, no, or even the marginalized. So those are units na in the hundreds of thousands lang. And I think we will find a way to make it happen. But it needs good regulatory support. That's what I meant, sorry. Secretary Aguzar wants to do 15 to 20-story condos for the marginalized sector. So these might be like 700,000 pesos to 1.5 million units in the heart of the city. So we promise, Secretary, we will find a good site. I think there's already a MOA signed in Bacolod for with another proponent. I think also in Kamsur. But we've already proven we can do such things. We already did 2, but these are rentals for informal settlers. 1,000 pesos a month lang ang rental, no? So already built. So you Google Lorega Tenement by Civil and Master. So So we want to be, if we were the first to do that with that, we hope to be the first also for our city. So let's yeah, because sometimes we have these very nice results, but I'm very passionate about how I can help the marginalized as well. And like Singapore, they have HDB. I think Secretary Jerry wants that effective system, and let's hope for the best. It will help our country, because if you have more Filipinos with good homes, you address what you call this crime, you address hunger. So daming masolve natin, no? So let's hope for that. Let's hope for that. Okay, I guess with that.
Actually,
oh.
there's one more.
Okay,
lang,
sure,
sir,
sure, please,
if
please.
It's okay.
Yeah, yeah.
Sorry.
That's okay. Yeah. Correct. So interestingly, the Radisson Red is also a premium brand of Radisson, but the red part, they're bringing a the theme is called ageless mindset. So when they say ageless mindset, it's not a millennial traveler, but even like I would say a 6-year-old, no, with an ageless mindset. So feeling young ba? Feeling young. So very hip, very modern, trendy, with a good bar, roof deck. So that separates you from the traditional 5-star hotel that's very luxurious, very I would say prim and proper. So the Radisson Red, sorry, I thought is the more ageless mindset brand of Radisson, and we're opening next year. That one, yeah. So very trendy, yeah. You have to add. Yeah, our head of marketing, Miss Joanna.
Something. Yeah, so Radisson Red, very, very interesting. So definitely nothing like Radisson Blue. So when you enter, for example, just to let you imagine, when you enter the lobby for welcome cocktails, you go to a bar instead and you choose your drink. So it's very millennial, it's very fresh, it's very unique. So a totally different hospitality experience. So when we come up with hospitality offerings, we have to think about what is not yet in Cebu, what is not yet in Vismin. So those are the things we develop and we bring to the region. So in addition to that, just you were asking a lot of questions earlier about how can we improve our awareness in Luzon, especially in Manila. So this will really be one of our focus this year, which is why we are doing this analyst briefing again in Manila. So we'll be doing more things. For example, in the end of May, we will be doing our accreditation to Manila brokers for CLI projects. So we're trying to gather more than 500 to 1,000 people from Manila to be accredited to be Cebulan Masses brokers. So more visibility, bringing in media around the Vismin to visit our projects, and not only in Cebu, but also in Davao. So I'm also informing media. So very soon we will contact you. Let's do a tour of Cebu, and maybe also go to our township in Davao together. What else? Aside from our investor relations and sales office, also in Makati, we will be doing a lot more visibility efforts to really ensure that we are more known in this area. In the past few years, especially since we became public, as I said, our really focus was to gain the trust and respect and the awareness of the Vismin market, because it's where we are. And now that we have done that, people know us, people love us, people are looking for us. Now it's really time to put our efforts here and to really do our part to really be present and visible here. So you'll really definitely see more of us soon. Thank you.
To anyone, by the way, if you're curious about our project, just go to our website or just Google it. It's there. I'll show you a few renderings. So you asked about Radisson Red. So take a look. This is sort of the peg or the motif of it. Very playful. It's fun. It's colorful. It's open space. So we're gonna have Sinulog in Cebu. We're going to have a festive, young atmosphere. This is the lobby that you can be welcomed. So at the Ichuran, this is the scheme of it. So this will open. We're targeting it, if not late this year, early next year. No?
Yeah, I think with CLI, we really invest in design. I think, of course, our CEO, our chairman, is very open-minded. So he always looks for new ideas from us, from his management team, looks for new innovations, and that's what maybe allowed us to gain market share. No, we are evolving always. No, we are never satisfied with the kind of development we do. And I guess with that, I'm also quite hungry. So, but maybe I want, on behalf of our chairman, Mr. Joe Sobrano, and our board, who are tuning in there, we'd like to extend our appreciation to you. This is not just going to be the first face-to-face this year. We'll try to do this really on a regular basis. We really want to engage with the shareholders, with the analysts more closely. And we want to really thank you for the support. I mean, your support motivates us to have these double-digit growth performances year in, year out. So thank you very much, and good afternoon to all of you.